Today I'm joined by RK Equity founder Howard Klein for RGN's first interviews in lockdown of 2021. Now, RK advises corporates and investors across the lithium battery metals supply chain. So Howard, what green shoots did you see in the sector last year after a difficult few years prior?
Well, the demand definitely started picking up, I guess, in China. Early in COVID, we didn't know if there was going to be some delay in uptick and a lot of unemployment. So car sales in general as a durable good actually fell in most markets, but electric vehicles have actually increased sales. That was largely because of policies implemented in Europe in particular, a very aggressive policy. So there was a surprise on the upside, I guess, around June, July, after the initial COVID wave happened, where there was some concern that maybe the Europeans or the Chinese would slow down the aggressiveness with their EV pursuit, but instead there was an acceleration actually so COVID broadly in across industry sectors, they talk about like innovation and technology. You had kind of 3 years of innovation in one because of the COVID disruption. So the green shoots started in China. I mean, the coronavirus happened there first, but they dealt with it, sooner and more quickly. So by the second half of the year, you had just better uptake in Chinese EV sales. Tesla obviously was a huge story all of last year. Beginning in June or July, they raised money 3 times, early in the year, then the middle of the year, then toward the end of the year. But the last 2 were like $5 billion, each at very high valuations. In part, that was as a result of big success they had with their Shanghai plant, but also just in general, the enthusiasm toward Tesla success begat, other interest. In the United States, you've had a lot of special purpose acquisition companies going public. So Hyliion, Fisker, Lordstown Motors on the auto side, and then you had battery companies like QuantumScape and LiDAR companies. And so there's just been a massive enthusiasm from a capital markets perspective to the thematic. And increasingly toward the end of last year, there was an understanding that the picks and shovels of the EV industry, whether or not Fisker wins, whether or not Lordstown Motor wins, ultimately lithium ion batteries are going into most of those cars. And within lithium ion batteries, the demand for lithium, graphite, nickel is going to increase very significantly. So from Elon Musk saying in July of last year, in his quarterly call to mine more nickel, as he started talking about nickel, as he talked during Battery Day in September about lithium as well, and he signed a deal with Piedmont Lithium, a very significant, telling factor that he's paranoid, other companies are paranoid about getting access to all aspects of the supply chain. And he also, very importantly, people seem to kind of forget about this, but he's entering the lithium business directly, to Tesla is. They are building a lithium hydroxide plant with Piedmont spodumene. He's also building a cathode plant, and he's also developing, his new battery. So all of that, from in 2019, the Nobel Prize was awarded to the founders of the lithium-ion battery. The momentum behind the lithium-ion battery and all the gigafactories that are being built in China and Europe and the United States, they're all lithium-ion, like a very large percentage of them are lithium-ion battery based. And as EV penetration is still only like 3% globally, we're still in very early innings, and you're just going to see, just the green shoots are there. You've seen it actually reflected in the pricing in the last few weeks in China. So the China carbonate price and the hydroxide price have stopped falling and have started rising.
Mm.
The demand factors that I just mentioned are a meaningful part of that, but also very meaningful is that there's been significant supply curtailments from Western Australian spodumene producers, and in particular the bankruptcy of Altura, which is a spodumene producer, but they were operating at full tilt so that they can, try to meet their interest payments, for their debtors. So they weren't acting in a normal kind of like market discipline way, because they had to, they were trying to meet their, interest payments. But ultimately they fell over. They got taken over by Pilbara. Pilbara shut down that mine. And as a result of that, there's, there's less supply of spodumene. And on the demand side, and also on the chemical side, Albemarle and Livent have also, and many other companies have slowed down their investments because prices were so low. Mm. And because the auto OEMs increasingly and the battery companies, there's a bit of a, a chess match going on. Like they want low prices long term. On the other hand, to incentivize supply and make billions of dollars of investments, companies like Albemarle, and Livent need to generate a 15%, IRR on those investments. And in order to do that, a price, with visibility and stability, not just, low prices and highly volatile, is necessary. And where that price lands it's a bit of a dance between, the buyers of lithium, in particular lithium hydroxide, and the producers of lithium hydroxide. We believe as RK Equity that the price should settle for lithium hydroxide outside of China. So if a Volkswagen or a Tesla is looking to sign a long-term agreement for hydroxide with a future producer or an existing producer and want those existing producers to invest in new capacity, the price should be, for lithium hydroxide battery quality, about $14,000. For carbonate, it might be a bit lower, and for China specifically, a bit lower. But so you're seeing the green shoots are translating into increased prices. They're still quite low. They're not massively incentivizing, but there's an expectation that the prices are going to continue to rise. And the market, from a capital markets perspective, for the last 3, 4, 6 months is actually, as always, forward looking, has started to bid up lithium development companies and lithium producers, and capital raising activity has increased a lot. There's been some M&A, as I just told you, distressed M&A, but there was another significant deal, which was IGO, a nickel producer in Western Australia, that is investing $1.4 billion in Tangxi, a Chinese company. So toward the end of last year, December, there were some significant financings all through September to December period, but the pace has picked up, and I think 2021 there's going to be a very significant amount of capital raised, because the message is out there that the demand is there, and the shortage a few years from now in lithium in particular, for example, the market, if it's only 300,000 pre-battery day, the forecast for 2030 were for 2 million lithium hydroxide. That has an upward bias, because just technology is moving faster than we expect. So, but even with 2 million tons, 1.7 million new tons translates into 50 new hydroxide plants, 25 new carbonate plants all around the world. Each of those are going to cost $500 or $600 million, and they need to kind of come online in 2023, 4, 5, 6, 7, and they take a long time to kind of come online. So the market's starting to realize that these SPACs that I mentioned, if it's QuantumScape, if it's Fisker, even if it's Albemarle, the market has stopped pricing, has stopped focusing exclusively on the immediate, China spot price, or even, the next 12 months earnings, but they've begun to start pricing companies with a longer term time horizon from, let's say, 2025. So these SPACs that have come out, whether it be Fisker or Hyliion, they have no revenue today, but they're promising to have revenue in 2023, 4 or 5, and EBITDA, at that point. And then the market's kind of saying, okay, if you're going to have $1 billion or $2 billion in EBITDA in 2025, let's discount that back and price in some expectation for that today at a much higher valuation than they were doing, just 6 or 12 months ago. And that's translating, that mentality is translating now into lithium producers and lithium development companies. So, it's an exciting time. As a chemical industry or mining industry, lithium specifically, and we're talking, principally about lithium here, has 20% growth, across the board. And then within that, lithium hydroxide, we're forecasting to be 40 to 50% growth, carbonate much slower, but still off of a higher base, 10 to 15%. So most industries or most commodity industries grow at a pace of GDP. So if you're growing at 5, 7, 8 times GDP, that's very exciting, right? It's an exciting place to be in. Investors want to be in that space. And, so within the overall materials, commodities, whatever you want to call it, industry is this niche of lithium, but also broader battery materials with such a significant growth trajectory and being such a significant, core ingredient to, there's also supply chain considerations and sustainability considerations. So, so the message has gotten out there. Too much of the production of this are in Chinese hands, so we need more localized supply for a variety of reasons. And, there's a lot of companies out there that have made discoveries in the past few years, but from discovery to actually getting into production needs significant capital. And the capital has been available only sparsely in the past few years. It's bear market, but it's going to be much more available now. So it's a very interesting time. A lot of stocks have already run, but it's definitely not too late. A lot of companies are still fundamentally undervalued, especially if you compare them to, again, these EV SPACs that I mentioned, a QuantumScape at 20 billion market cap or a Fisker at a 5 or 6 billion market cap is, in my opinion, much more risky than development companies in North America or Europe that are trading at 100 million, 200 million, 500 million market value, when they're going to, they have a very economic mine and business plan. And again, if I'm right that a Tesla or a VW or a GM is going to be contracting with lithium development companies and lithium producers at a $14,000 hydroxide price, if they're able to produce at $5,000, $6,000, $7,000, right, they have very significant margins, right? So that's very exciting. And if they have a locked in price, there's predictability to their earnings. The earnings quality is higher. It's higher than it is for a cyclical commodity. And therefore, you could pay a higher multiple for those earnings because they're of higher quality. So I think this message is starting to be understood, but there's a lot more education that needs to be done. And I very much appreciate your interviewing me, to help spread this message.
Yes. So one thing that I did pick up from what you just said then, so you talked about the localization of supply chains. So, recently Europe has really kicked on as perhaps the new hub for global lithium processing, and also, straight from mine to EV. So how has that growth been driven in the last 12 to 14 sort of months?
So much of what's happening in the EU is, policy driven. So they have very significant, emission reduction regulations and penalties if you are not producing a meaningful quantity of cars that are lower emission, you then have to pay fines, or pay credits. So Tesla receives a fair bit of income, by some auto companies who haven't yet, developed, enough low emission vehicles, and they're paying the penalties. But the penalties become increasingly severe, so it becomes more painful, or not. They can't just pay penalties. They're going to be forced, they're being coerced to produce these vehicles. On the other hand, they are making very significant subsidies. Certain countries, I think it's France, I don't want to be misquoted, but like maybe it's 7, 8, 9,000 euro per vehicle, right, to incentivize take up on the consumer side, because they're still expensive. Battery costs still have to come down. It's not yet, price parity on the purchase price, side of it. If you look at a total cost of ownership, and most people don't make that kind of lifetime calculation, because EVs, to fill up your tank versus, to charge your car, or lower maintenance costs, et cetera. They in many instances, a Tesla Model 3 is price parity, against an Audi 4, but, cheaper cars than that, not yet. But anyway, so there's carrot and stick very significantly in Europe. I think you're going to start seeing that as well in the United States under Build Back Better Biden, right? And we'll see what happens with this Georgia election. But if it goes all Democrat, and they have, the Senate, they have the House, they have the White House, the Obama-Biden administration in the first 2 years, that was the same scenario. They were very supportive to supporting EVs and supporting solar and wind. I think they'll start supporting, possibly mining projects with low interest loans. In Europe, that's happening as well. Europe, you didn't mention, but I think there's a European Raw Materials Alliance, on top of the raw material, or the battery alliance, and they want to be 80% self-sufficient within some time frame. I forget what it is, and those are aspirations that look unrealistic when they're currently importing 100%, and they don't have any current mines financed and going into production. They have cathode plants, they have battery plants, they have EV plants, but there's no like lithium hydroxide plants currently in construction in Europe. But we believe companies, a company we represent is European Metals Holdings, is in the Czech Republic, is a very large hard rock deposit that, they're funded until, their construction decision later this year. But, there's a lot of interest from OEMs. If you look at Tesla signed an agreement with Piedmont because they want localized supply chain. They don't want, only to be buying materials that are shipped, thousands of miles around the world, not only from a sustainability perspective, but from a manufacturing efficiency and, just in time, inventory management, working capital management. So I imagine they're going to want to do the same in Europe. And, European Metals Holdings is a past producing tin mine. It's in the Czech Republic, which is there are EU funds. There's there's a just transition fund in Europe. I mean, Europe is the European Investment Bank. BNP Paribas has an energy transition fund, right? So there's a number of funding vehicles that are that have been deployed in the auto sector, in the EV sector. Northvolt's been funded, Umicore, LG Chem, through the European Investment Bank. So there's a number of institutions that I think are going to start providing grants, providing soft loans, in addition to the commercial banks providing traditional project finance, but potentially with some credit enhancements from some of these quasi or these pan-European banks to help stimulate the goal, right, of becoming more self-sufficient, because there's a bit of a capital markets disconnect. I mentioned like Altura went bankrupt. Altura went bankrupt because they had to borrow at like 15% interest rates from, hedge funds in America, because there wasn't a mature, low interest rate, funders available. And that's now coming in this cycle for lithium, that's coming. And again, the Volkswagens of the world, the BMWs, who have been signing contracts with a Chinese company named Ganfeng, for all of their hydroxide, they're going to realize they can't rely on a sole supplier. They can't rely on a sole country. They're going to need additional supply. And, companies, like I said, like European Metals Holdings, there's a few others in Europe, like Savannah Resources in Portugal, and there's one in Spain, and there's a couple of non-hard rock deposits, geothermal brines that are in development, quite early stage. But like the most immediate, nearest term source of lithium supply, I think, is this Sinovac deposit, in the Czech Republic, and then Savannah potentially after that. Portugal actually has some production of lithium, and they're near port as well. So getting it to kind of where the manufacturing is in, the Germany and elsewhere, could make sense.